As of February 18, 2026, the global blockchain ecosystem is on a cold testing ground, where it must prove its actual economic value beyond technical brilliance. In this fierce market competition, Avalanche has established itself as a project, most noted from the perspective of a survivalist innovator that expands its own territory, rather than being a mere trendy technical product. While many Layer 1 blockchains collapse due to network instability or excessive fees, Avalanche captured the heart of the market with the powerful weapons institutional finance, craved most regulatory compliance, infinite scalability, and near-instant transaction finality. Currently, Avalanche is shedding its stigma as a playground for speculative assets and evolving into a core infrastructure, implementing the true Internet of Value, serving as the most trusted pipeline for global asset managers and banks to move real-world assets RWA on-chain. Avalanche's greatest proprietary advantage that clearly differentiates it from competitors comes from its unique architecture, called the triple chain structure. Unlike most blockchains that experience bottlenecks, by trying to process all transactions and contracts on a single chain monolithic structure, Avalanche maximizes efficiency by thoroughly distributing roles. It is divided into the X chain for asset creation and trading, the P chain for network governance and subnet management, and the C chain for smart contract execution, with each performing optimally in its respective area. This distributed structure is like a large hospital, operating the emergency room, operating room, and administrative office separately to increase the speed of patient treatment. In particular, it provides strong resilience that prevents a failure in a specific chain from leading to the collapse of the entire system, meeting the high level of stability required by financial institutions. The software innovation supporting this hardware structure is the Avalanche consensus algorithm. To use an analogy that is easy for the general public to understand, it is like repeatedly asking a small number of randomly selected neighbors for their opinions to converge on a majority view instead of asking tens of thousands of residents gathered in a huge square at once. Avalanche achieved a finality time of less than 0.8 seconds. Through this repeated random sampling, this contrasts with Ethereum, which takes 12 seconds to several minutes, and Solana, which has fast processing speeds, but shows instability where the network occasionally stops. Since financial institutions place the highest priority on guaranteeing the immediate and irreversible state of a transaction, Avalanche's sub-0.8 second finality time becomes a unique weapon that Ethereum or Solana does not have. Avalanche's subnet technology goes beyond technical expansion to solve data, privacy, and regulatory issues, the biggest barriers institutional finance faces when adopting blockchain. A subnet is an independent blockchain built on top of the primary Avalanche network, where the operator can directly set the validator qualifications. For example, a bank in a specific country can configure a network only with validators who have undergone identity verification procedures to comply with anti-money laundering regulations, while enjoying the security of the blockchain. This provides a performance isolation effect, much like the noise of a neighbor's house, not disturbing the peace of one's own home, ensuring that excessive traffic from other subnets does not affect the bank's system. Thanks to these structural advantages, Avalanche has evolved into a blockchain-as-a-service platform that combines the advantages of enterprise, software, and blockchain rather than being a simple coin. In terms of proving effectiveness in the real world, Avalanche recorded overwhelming performance in the field of real-world asset RWA tokenization throughout 2025 and 2026. As of January 2026, the total value of real-world assets deposited on the Avalanche network exceeded $351 billion, a phenomenal growth rate of approximately 950% compared to the previous year. At the center of this growth is the participation of giant asset managers like BlackRock. BlackRock launched BuIdle, a $500 million tokenized fund on the Avalanche network, creating an environment where institutional investors can manage assets quickly and transparently. In addition, Galaxy Digital successfully issued a $750 million tokenized collateralized loan obligation CLO on Avalanche. In this process, Grove, an institutional credit protocol, acquired $50 million, proving a new efficiency in the capital market. While it took months to issue and trade, these securities in the traditional financial system on the Avalanche network, settlement is completed in just a few minutes, and the entire process is automatically managed through smart contracts. In the real estate sector, Balcony, a real estate infrastructure company in New Jersey, is digitizing more than 370,000 land registries through a subnet, integrating approximately $240 billion worth of real estate records on-chain. The expansion in the Asian market is also showing remarkable results. Hong Kong's Fosun Wealth Holdings launched FUSD, Asia's first yield-bearing RWA stablecoin on the Avalanche C-chain through its financial platform, FinChain. FUSD is based on government bonds and money market funds as underlying assets, providing institutional investors with stable returns and immediate liquidity simultaneously. In Japan, Toyota Blockchain Lab and SMBC Group are experimenting with payment systems and stablecoin-based financial infrastructure, using Avalanche technology, demonstrating that Avalanche is acting as a key engine driving the digital transformation of Asian financial hubs. Avalanche's medium to long-term growth engine comes from the Avalanche 9000 upgrade, which is leading a major transition in the ecosystem as of 2026. The core of this innovation, also known as the Etna upgrade, is to cut the cost of building a subnet by 99.9%, compared to before, allowing anyone to start their own independent Layer 1 blockchain for just $50. In the past, at least 2,000 AVAX tokens had to be staked to maintain a validator, but now the model has shifted to paying only as much as needed, when needed. Along with this, the introduced Avalanche Interchain Messaging AWM system has built an environment where different subnets can freely exchange data and value, without separate complex bridges. The Octane upgrade in April 2025 reduced C-chain fees by 99.6%, and the Granite upgrade in November introduced biometric authentication features, providing extreme convenience for users to log into Web3 apps with just their phone's fingerprint or facial recognition. This series of upgrades has transformed Avalanche into the most attractive platform for both developers and users. In the next 3 to 5 years, Avalanche's market position is predicted to go beyond a simple blockchain network to become a giant digital vascular system through which global capital flows. The more than 75 active subnets currently in progress are expected to increase to more than 1,000 by the end of 2026, which means infinite horizontal expansion covering everything from gaming-specific chains to financial chains that comply with country-specific regulations. To this end, the Avalanche Foundation operates Retro 9000, a $40 million developer grant program to continuously foster innovative tools and solutions within the ecosystem. It is predicted that the average price of Avalanche will reach the $120 level by 2028, and it is analyzed to exceed the previous high of $144 in 2029. Once traditional financial infrastructure begins to move on to Avalanche, AVAX's status will be strengthened, not just as a simple coin, but as collateral to guarantee system security and the core fuel to power the network. Furthermore, the current price trend, which has fallen more than 92% from its 2021 peak, is detached from the network's remarkable growth, increasing psychological fatigue for investors. In the fourth quarter of 2025, the AVAX price fell 59% to record 12.3, and it is hovering around the $11 mark in early 2026. Large-scale token unlocks that occur regularly also act as supply-side pressure. On February 11, 2026, approximately 1.67 million AVAX tokens were unlocked, worth about $15.2 million at the time. This supply pressure acts as a factor suppressing short-term price increases. However, even amidst this price weakness, Avalanche recorded a net inflow of $135 million as of February 2026, showing the strongest capital attraction among all chains. This is a clear signal that institutions are moving toward Avalanche, even when the market is quiet. In terms of investment strategy and future value, experts pay attention to the burning structure, which is Avalanche's value creation mechanism. Avalanche burns 100% of all transaction fees generated on the network, which creates strong scarcity given that the total supply is limited to 720 million tokens. Data showing that the average daily transaction volume in the fourth quarter of 2025 increased by 63% year-on-year to 2.1 million transactions, suggests a structure where the value of AVAX can rise exponentially in the long run. In addition, Avalanche has no slashing penalties where validators lose their principal, providing a safety net that institutional investors consider most important. When staking large amounts of capital, by maintaining only 80% uptime, one can stably receive rewards of approximately 8.5% per year. making it suitable for conservative asset management. If the Avalanche spot ETFs applied for by Bitwise and VanEck are approved, massive institutional funds will flow into Avalanche, serving as a catalyst to escape the current undervalued zone.